Hi everyone, this is Mike Kramer of Mock Capital. Today is Tuesday, September 17th, and it's around 5 p.m. New York time. Basically, at this point, we're going to be going into a period where we're going to have a lot of central bank meetings and central bank discussions in terms of what we're going to be seeing from the Fed tomorrow. Expectations are basically that the Fed is going to cut rates by 25 basis points. We also have some estimates in terms of what the market is looking for in terms of rate cuts going forward. For the current year, they're looking for the dot plot to come in and show about 4.625% for the current year, 3.625% for next year, and 2.87% for the year after. The long run forecast, we're looking for something at around 2.87%. So these are important because the market is trying to obviously get a sense of where the Fed is going to be taking monetary policy over the next several months. And this is going to potentially give us a little bit of a heads up in terms of how the yield curve is likely to develop from here, and more importantly, how currencies and equity markets may respond to these data points. And then, of course, on Thursday, we'll be getting the Bank of England rate decision. Expectations are for rates to remain unchanged. And then on Friday, we're going to be getting Bank of Japan. Expectations are for the BOJ not to make any changes to monetary policy. So again, markets are going to be listening very closely to what central bankers have to say, and if they can get any sort of information in terms of where these bankers are thinking monetary policy goes. And we can already see, the British pound has had a very strong move against the US dollar over the last several weeks. We did have the breakout of the bull flag this week, and that has seen the British pound strengthen versus the US dollar. Really, the next big level we're watching for here on the pound comes around this 133 level, 132.7 to be precise, because after that, you can really start making cases for the pound to start pushing up to around 136 or so. That's certainly a possibility, especially if the market gets a sense that the Fed may be looking to cut rates more aggressively, and the BOE is looking as if it's going to be cutting rates at a much slower pace. When we look at the euro's also had a little bit of a move higher over the last couple of days. Again, you basically have a ECB that's really not committing or giving any guidance in terms of where it expects to cut rates. And so the market's going to be leaning heavily in terms of what the Fed has to say about its path for going forward. You can see a very similar pattern has formed in the euro versus the dollar as well. And it looks like we could probably make a move up to around 112.13 or so if this is the correct pattern. And we do have what looks like also a bull flag or a bull pennant here. On the US dollar, Japanese yen, it looks like we may have formed a little bit of a falling wedge here in the USD JPY, and that could suggest maybe the yen is due to weaken a little bit versus the dollar. We've obviously made a very big move in the yen more recently. It doesn't necessarily mean that the longer term trends have changed, but again, it is possible here that if we have formed a falling wedge, and given how low the RSIs are, and given where we are sort of on the lower Bollinger Band, it's very possible that we could see some sort of weakening in dollar yen, potentially pushing it back up towards this 143 to 144 range in the not too distant future. Especially again, it would just take us back to the 20-day moving average, which really has been the key resistance level for the USD JPY over the last couple of weeks. Gold continues to move higher. Gold looks like it's starting to get a little bit overbought here. You can see we're trading outside of the upper Bollinger Band. We're also getting to that 70 level. I would watch for gold to see if it can maybe retrace back to this 20-day moving average over the near term, just again because we've had a little bit of a big move and we have seen it get a little bit overextended here. When we look at oil, we had talked about the potential for it to get down to around 67. So far, that level has been the big level, and that level has held. So we're going to want to watch now to see what happens if we can manage to get back to and test the 20-day moving average. That's obviously the big level of resistance. We've also seen the 10-day exponential moving average serving as a resistance area for oil. Again, the 67.5, 66 to 67. Again, the 66 to 67 region for oil is a very, very important region. Because if this level breaks, it's going to signal much lower prices coming for oil, with potential for us to slip into the low 60s and maybe even much lower than that. You can see over the longer term, we've broken this very important symmetrical triangle. And again, this is a very bearish development if we can't somehow get a pretty quick snap back off of the 67 level. Otherwise, it's looking like oil probably still has much further to decline. When we swing over to the DAX has been able to, at least to this point, refill a gap that was created back here on September 3rd. A lot of the charts have the same gap pattern in it. We basically got back up to that gap. That's where we stopped going up. And now we have these gaps to fill at lower levels. So if we're unable to really snap out tomorrow and quickly take out this level here around 18,770, if we can do that, we can potentially make a move back up to this 18,875. But if not, I would start looking for lower gaps around 18,600 and then maybe again around this 18,500. With the potential really to fill the gap all the way back down to this 18,300 in the coming days and weeks. When we look at the FTSE's also gotten back to this 18,350 area. This has been, again, an area of resistance going back for some time. And at least every time we get up into this region, we tend to come back down and retest lower levels. So, again, upside seems limited here, maybe to around 8,400. Downside seems more promising, though, perhaps down to around 8,170. If we just throw a chart of copper in here to kind of get a sense of where copper has been going, you can see copper's also been going higher, but notice copper's also been leveling off. So I would keep an eye on copper. You do have an uptrend here that you can keep an eye on as well. There is an uptrend here in the FTSE as well. Break the uptrend in copper. Likely going to see that revisit here to around 8,180. When we move over to the NASDAQ, it's come to this important level right now. Basically, we're sitting on a trend line. If I just adjust that a little bit here, you can see today we tried to break above the trend line. We actually gapped above it, but we weren't able to hold it, and we came all the way back down to basically finishing flat. Now, tomorrow we obviously have a very big Fed meeting, and it's important to note that we're seeing that today we saw a very big move up in implied volatility, especially on the VIX 1D. You can see I have notes about Powell is peaking in the past and how this also causes implied volatility to rise. And usually he begins his press conference and he starts finishing up his prepared remarks around 2:35 or so in New York time. You can begin to see implied volatility coming down. So that could give the equity market a little bit of a boost. Again, it's going to depend on where it's coming from, but this is something to keep an eye on tomorrow, to watch to see if there's that implied volatility crush where implied volatility comes down as soon as he starts finishing up his prepared remarks, and to see if it lifts the equity market higher. Because again, what we're talking about here is a NASDAQ that's at a very important point. And when we've gotten to this point in the past, that's typically where we've stopped rallying. And if we were to see some sort of potential move higher in implied volatility to start the day, it could imply that we're going to see the NASDAQ actually begin the day lower, then maybe come back up as implied volatility melts, and then come back down, perhaps depending upon what the Fed says and that implied volatility crush wears off. Especially if we're going to be sticking with this idea here that we're in some sort of consolidation phase, or more importantly, the NASDAQ is now changing trend and direction. Because again, when we look at the RSI, you can see RSI is clearly showing momentum shift. And so this is, again, very important to keep an eye on. This is the big level here, this trend line. If we can't break above this trend line in the next couple of days, I would again be looking for levels down around 18,900. On the S&P 500, we've been able to make an advance back towards this high. Basically, at this point, all the gaps at the higher levels have now been filled. There's no more open gaps at this point in time. So the S&P 500 is either going to make an attempt to take out this high and go on to new all-time highs, or we're looking at an index that's going to start trying to fill some of these gaps at lower levels that have been left open from when we started moving up off of them in early August. Actually, what's interesting is that you can see on the S&P we had this big rally into the close until Labor Day weekend, and then that big decline coming out of it. You can see this gap filled really nicely. It was like the market was racing to fill this gap. But what's interesting is if you go back to this low here, you have a very similar thing where you had this big decline here and then this big gap opening, and yet we haven't even attempted to fill this gap yet. That's still out there, and that's something else to be aware of, because this is a very similar type of gap to what was created back here at the beginning of September. Additionally, we also had this really big rally following the CPI report that kind of came out of nowhere midday. And so we're waiting to see right now if some of this gets retraced. I mean, one would think that some of this gets retraced, and I would certainly be looking for potentially a move back down to around 55.50, just because that's an area where there's a lot of gamma concentration, and also around the 5,500 level as well, because that's where this whole sort of thing really began. And finally, when we finish up with the Dow, that managed to go on to make a new all-time high. Basically, right now we're kind of keeping an eye on the Dow to see if we can take out this high at 41,800. If not, a break 41,500 likely opens the door to filling some of these areas that were left behind as the market rallied. 40,860 seems like an area of support and of some importance that we could be looking for if we're unable to take out this high fairly quickly over the next 2 days. That's all I have for you today. I hope you found this helpful. Until next time, see you next week. Bye.